The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on Monday, as we came back from the weekend, we saw a solid day Friday and then another very solid day on Monday as well, as we take a look across commodities, grains, livestock, energy, stock market, you name it, pretty much green across the screen to kick off the week. Here to walk us through what he sees in the trade, John Heinberg, Total Farm Marketing, is with us today. John, hope you had a good weekend and really very positive day across pretty much everything on Monday. Hard for me to pick a place to start just because everything looked really, really solid across the board to start off the week.
Yeah, very much so. Risk on type trade today, that's for sure. It started out with the equity markets, crude oil picking up some couple dollars a barrel today. Then it just seemed to pour right into the ag sector at the same time as we saw good strength in the grains, strong triple-digit gains in the cattle and the hog markets today. So just one of those days, a little hard to explain, but it just as you get the flip side, those are ones when you say the risk off day is here. Today looked like one of those days the money wanted to flow back into, those assets. And, we finally got the commitment traders back up to speed. So some of these positions have really changed a lot here. And maybe now that they realize everybody knows what's going on, they want to get back on the other side.
Yeah, very, very true. Well, let's dive into these markets. Let's start with corn first. Felt like, if anything, corn was a bit along for the ride. I know we got some surprising weekly export inspection numbers that impacted corn. I wonder if that had anything to do with just corn, not necessarily weak today, but just up moderately compared to the soy complex and wheat.
Yeah, corn futures, another solid day. Those were, again, one thing here, we're watching the demand side, and we did get another sale this morning, fairly small one into unknown destinations. So, but I believe that's 8 out of 9 sessions now. We've got some form of export demand. Again, does the USDA have to make an adjustment down the road on that? We'll see. Maybe they've undershot that target. Then obviously we got the big acre report at the end of the week, and the funds have gotten themselves short corn last week. We saw them get to about 54,000 short contracts. The commitment traders on Friday moved it back up to 41,000 short contracts. Now we got possibly the goalpost set a report here for at least the spring until we get the June plannings report coming at us. And so the funds may be looking for a window to pour some money in or square up some of those positions. And they obviously took advantage of that today. Plus, you throw in a strong move in the wheat market, strong move in the soybean market, and corn obviously was going to come with in the momentum side of the trade here today. But again, weekly export inspections were a little disappointing. You're on that 600,000 metric ton level. That was below expectations. And that just kind of, in a window, we need to see corn really kind of hauling out here, especially with the purchases we've seen recently. So that may have gave us a little bit of a lid, but to me, it was just about money flow coming in, some of the spreads moving around a little bit, and just positions getting squared up and some nice gains today.
Well, John, as you think about those reports coming up on Friday from USDA, obviously the acreage report, those surveys conducted at the beginning of March, I have to wonder now, we're getting a lot of different private estimates, private surveys out. The most recent one, Farm Futures, here saying we could have a smaller 2023 corn crop according to the farmers they surveyed and a bigger soybean crop. So I just wonder, with all these different private estimates coming out ahead of those numbers on Friday, what's the sense the trade could be like here as we get into Friday? Does it feel like that acreage number is going to have as big of an impact as it has had in previous years, do you think?
It typically does. When you go kind of look at the most volatile reports that the USDA puts out, grain stocks reports, as well as the acreage intentions, planting intentions, and the final planting acres in September. Those are the 3 biggest movers of the year and the most volatile of the reports. So, we could see a fairly aggressive move one way or another on this in the corn market or all these markets just based on what those acres come out. I'll tell you, if that farm futures number comes in, market's thinking just short of 91 million acres, and we come in sub 90, that immediately takes a couple 100 million bushels off carryover. If we got a little better demand than we think right now, things get tight really quickly. And next thing you know, corn will be sitting back at $6 on the December side pretty doggone quickly. Now, on the flip side of that, 550 has been a big consolidation point for new crop corn. That acre number comes in heavier. Let's say it's a 91 and a half or something bigger possibly. I could see this market drop into the $5 handle. So, we could see a very aggressive move in this market as long as it doesn't, come in line with those expectations one way or another. So key for me with customers right now is talking about balance, moving some unnecessary risk out of accounts, things of that nature here, just so we don't wake up on Monday morning and try to figure out what went wrong. And then they're going to reset the goalpost with this report. And then we'll get our plan together here, how we want to attack the next handful of months.
I was going to say, I think this goes for everything, corn, beans, wheat right now, heading into this report with its known volatility, rewarding some of this rally if you're in a position to do that, depending on your balance sheet. Obviously, I think that's kind of a big key to remember here in this week ahead, John.
Very much so. And you go look at the charts, this 550 area in December corn held in there pretty nicely. Okay, so what do we do to protect that? I'm looking at the 550 December puts here, getting some floor in because I'd rather be wrong with the put and leave the upside wide open. And then it's trying to figure out what happened after the report hits with nothing in. So those are some just key things. When you see where prices consolidate, those are break areas. And if we break those areas, the momentum is going to take things quickly one way or another here. So that's something I've been talking with customers about, and it's not a great number, but boy, we could be a lot worse if things fall apart. So let's make sure we're protecting some of the value that's out there. Also a window too, if you're behind on some cash sales, get some things done. Probably want to have some reownership opportunity over those sales at this time window. Again, we got a lot of different variables and moving parts out here, and I'm not 100% sure, at least I'm not convinced in my mind, that the high for the marketing year in terms of the December corn futures was going to be on the first day of January.
That's a good thing to think about and keep in the back of our mind. John, soybean complex, we'll call the soybeans along with wheat probably the winners of the day, and along with livestock too. We'll talk about that later. But with soybeans, I know the export inspection number, the amount of shipments to China, that was a bit of a surprise. We've been talking about China buying corn, but yet here's China still getting some soybeans shipped out, and just wonder if that maybe gave us some base for strength as well in soybeans on the day Monday.
Yeah, it's a combination of those fundamental factors as well as the technical turn. I mean, we put a good turn in the charts on Friday. Now we saw some good follow through again here today, getting to the upside, putting that higher high in, which just kind of makes you go, maybe this thing got a little overdone last week with the hard aggressive selling. Then you get that export inspection number, again, a window where things are supposed to die down here, but that's just a reflective of what's going on in Brazil in terms of the later harvest, just the backup of getting beans out, also just the need that China has for beans. Instead of waiting for 30 days plus to get those beans out of Brazil, they can load up some of those early sales that they got from us and get them moving now. So that's encouraging to see. We'll see what the depth, how far this thing wants to kind of come back in its recovery. Obviously, I'm still a little concerned about the South American supplies being in the pipeline. What's happening on the cash market down there, farmers selling down there. Those are all negative influences on this market. But at least going into that report this week, we're getting ourselves a nice little bit of a pop here. Again, we'll see where it wants to go. Probably want to be a seller on strength in here and then look to re-own longer term again, because again, it's a market with only 200 million bushels of carryover. It won't take much to get this market really heated up again later on this summer. So again, just protect the value that the market's giving back to you here, because right now today, 14.20 in July looks a lot better than it did on Friday, close of the day on Thursday or early Friday morning.
Well, I think some strength as well in soy on the day coming from that crude oil market after things spilling over to bean oil, which then just kind of spilled into beans and bean meal as well. And thinking about crude, obviously, you mentioned this earlier, up 2 to 3% on the day. Pretty solid rally there that I think helped fuel a lot of this risk-off trade.
Very much so. Again, crude oil is still the barometer in the commodity markets, and it was struggling heavily with the bank failures and the banking concerns, and what that did with the equity markets. And you just saw that money bail in the crude oil market on the recession concerns. So good snapback today. I really wanted to see it get through that 70-71 handle. It's done that on the May contract today. Leaves us open, maybe a little bit more of a test. About 50% retracement of the sell-off is just around that 73 window. So that might be an area we'll see if this thing can push through. But again, a good bounce back there. Not even turn the commodity indexes, the Bloomberg and the Goldman Sachs commodity index is a little bit more positive in terms of its trade, because those look like they were starting to fall apart. So again, maybe it was a signal that the commodity sector today needed some money flow.
We are having a conversation today with John Heinberg of Total Farm Marketing. John, this wheat trade, I know we're watching a lot of what's going on in the Black Sea region still with Russia and Ukraine and some of the geopolitics there. I know, been hearing rumors in the trade that Russia may put a minimum price on wheat exports, possibly. Just wondering if all this news with what's going on with Russia, if that's having some impact in this wheat market right now.
I think that's some of it. Obviously, that caused a bit of a turn on Friday with the whispers that they might limit some exports, and now talking about price floors, things of that nature. It just puts a floor under the market, at least in the traders' minds. Then we go throw in some of the weather concerns that are out there. Australia looking very hot, very dry, typically in an El Nino type pattern. So that, major wheat producer, that's a wait and see what happens. And then let's go look at the U.S. Northern Plains, a lot of snow cover up there. What's going to happen with that spring wheat market? That was some of the strength today, and actually was a stronger front end finishing market was the spring wheat and the KC wheat today, over Chicago. Probably tied a little bit to those crop concerns. Again, in the KC wheat belt, we still got a lot of issues in that regard. We'll get those first official USDA crop ratings here the first part of April. They're not going to show a whole lot of quality crops out there. And again, so maybe we're a little bit underdone here. The funds, again, heavily short this market. We're starting to take some shorts off last week. Saw some more follow through on that today, that maybe this market needs to turn around here. I'm not saying we're going to go back flying higher all the way again, but let's get back to an area that's going to be a little bit more respectable in terms of the global supplies and the concerns that are out there. And that, again, should help out that corn market as well.
Well, you mentioned the U.S., and I know Kansas, less than 20% of Kansas's wheat crop in good to excellent condition right now. And the latest U.S. drought monitor, just over a third is in D4 exceptional drought there in Kansas. Now, sounds like some of it's not in corn and bean growing areas in Kansas. It's mainly on that wheat belt. But again, to your point there, and then throw in, like you said, with spring wheat, I think there's a lot of weather that we're going to really have to keep our eye on this wheat market and everything as a whole here, John, because once we get past these reports on Friday, it's that time of year where the market really shifts over to what's happening with U.S. weather.
Very much so. And the planning pace that may be coming or not coming in the front end. I mean, again, planning delays and gives us some strength. Maybe we just need to put a little premium back into this market after this sell-off. So that might be some of the reason we're seeing some buying here. But at the same time, you, again, talk about the snow of the Northern Plains. Here through our area of the world, we picked up a solid quick 8 inches on Saturday morning. And then you go look at the longer range forecast. We're not going to be getting above 50 a whole lot in the next couple of weeks here. And that puts us into April, and then you got heavier rains through the southern part of the Corn Belt as well. So just a combination of factors that you're going to probably hear that little chatter about prevent plant, maybe starting in the north more because of the snowpack. Those come into play. Again, we are still historically tight on the supply side of the equation. It wouldn't take much for this market to realize that we need to get some premium here and ration supplies, especially if we start losing a couple million acres here or there due to prevent plant, when you go look at where we are for corn and bean carryout.
Let's talk livestock, John. Again, we touched on this earlier. Really solid day in both cattle and hogs. A lot of triple-digit strength on the board. I know you mentioned us being caught up on that CFTC data. Sounds like maybe that had a little bit of an impact on especially that cattle market, just showing a little more long liquidation than I think the trade possibly expected there in cattle, John.
Yeah, they really shaved that long position down in a big hurry, taking a pile of contracts out. And now we saw the market rebound back here too. And I think just, again, that stability in the other sectors, the stock market feeling a little more comfortable today, crude oil being a little higher today, kind of some of the recession chatter got moved to the sidelines. The biggest thing still about cattle is the numbers aren't there. The supply is not there. As long as the demand can stay there, these prices got a little bit cheap, especially when you look at June trading $5 under cash. And it just needed some catch up here as we're getting closer to that April contract expiration. Cash trade this week, we'll see what we get. We have, steady, slightly lower in some regions. But, the Packers got a little bit of meat on the bone in some of their Packer margins. And again, now we're going to start thinking about that grilling demand window here after the Easter holiday. So this is that spot where we might see them have to step back into the market and compete for tight cattle supplies. Feeders got a good bounce today. We saw a big jump in the index. On top of that, again, a market that was getting a little bit oversold. So even with the strong corn market today, it was good to see feeders get some recovery because, again, those supplies are just difficult to find. And again, what's on the board is not reflective of what we're seeing on the countryside. Lastly, hogs, they've been so beat up that funds are sitting 16,000 short contracts. Not sure if that's a historical record, but it goes. I go back to 2017 on my charts and wasn't anything close on the short side. So that just tells you they hammered that market a lot more than they need to. And I've mentioned it before. Hog markets and cattle markets have a tendency to V bottom or V top, and it kind of looks like at least if we can get one more day of follow through, that hog market might be putting that V shape in.
And I think any hog producer who's been beat up by this market would like to see that V shape get through this market here so we can maybe find a floor in hogs. And I know, too, one thought you mentioned feeders. They're having a good day even with corn higher. I know looking at feed usage on the Friday reports for corn, I think that's going to have an impact here in this cattle trade. Just one thing to watch for as we get to those reports at the end of the week.
Yeah, very much so. Again, that's going to be one of those demand factors that's going to come into play in the grain stocks report. We had a pretty decent weather pattern for the winter in terms of feeding, but we had our share of cold shots in there. But with the numbers being down, we'll see what that does in terms of total feed usage. And for feed input buyers out there too, this is a window you got to break in some prices here. Start looking at getting some coverage, whether just using some call strategies out the next fall. Because again, I would rather have some calls go worthless and the market drops, so your inputs come down, versus just all of a sudden realizing, shoot, the acres aren't there, the weather's gone, and next thing you know, these tight supplies get us a run up in prices. And I know there's already enough competition for feed grains out there because of last year's harvest. So don't forget about that side of it in terms of the feed inputs.
John, how about that dairy market? What are you seeing there as we kick off the week?
Well, the flooding in California gave us some really good front-end strength, got up and poked around that $20 handle, and seems like we've kind of hit a psychological wall. So to me, anytime you get those types of moves, that's an opportunity to get some things done if you haven't got things done in terms of sales, or protect yourself in that regard, because eventually that situation will straighten itself out. Cattle's out there, the production's out there. But there's a heck of a recovery in a market that was getting pretty heavily oversold. Now looks a little bit tired again in terms of we've taken this maybe as far as it wants to go.
Well, John, great thoughts as always. Before we wrap it up here today, any final thoughts you want to share with folks?
Again, the key going into this report this week is balance. Don't be afraid to get some sales in, have that reownership over top. Don't be afraid to get some floor underneath this market. Because again, we don't know what the number is going to be. We don't know what the surprise is, if there is one. Typically, the USDA reports lately have found one surprise somewhere or another that really gets the market moving. And this one could be as volatile as we can see. We can see a very aggressive move one way or another. So again, just make sure you kind of look at the whole situation where you're at. If you're light on some sales, get some coverage in here. Again, I'd rather watch puts go worthless and your bushels go higher overall, compared to just doing nothing and wondering what happens if things break the other way.
Well, John, great thoughts as always. And if folks want to reach out and get some advice, I know they could do that with you there at Total Farm Marketing. How can they get a hold of you?
Sure, love to chat with me anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And that website of ours, totalfarmmarketing.com. A lot of great information. Probably a webinar getting put together for that report, so make sure you take a look for that. And again, it doesn't cost anything to pick up the phone or shoot me an email. Just love to chat markets with you and see if there's anything I can help you with.
TotalFarmMarketing.com, great place to start. With that, John Heinberg, always please appreciate the time. Thanks for joining us here today, and have a great week, sir. We'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.